morning, everyone. First of all, happy Independence Day to all. So, taking all your time on this public holiday for this event shows that you all are taking these things very seriously, and it is very important for us to recharge ourselves in a manner that. That it creates a long lasting impact on whatever you do in the work. So skill set is always very important when you work practically. So thank you everyone for devoting such a valuable time to this event, and it is wonderful event organized by Hardik sir, and thank you very much for organizing this event, because uh, it is a very important social service they are providing, I can say, because there is they are not getting any benefit of it, and you people, the attendees, are getting a very fruitful session for this thing. And thank you very much, Hardik and talented team, for organizing this seminar, inviting me as well as a speaker. That is, I'm very obliged, and heartfully thank you for the same. So today my topic is IFRS 15, revenue from contract with customers. What I have seen is that whenever in auditing profile you are giving interview, or may it be in any other profile, uh, they might consider that in the financial statements, what is the high risk areas. So the most high risk area could be identified as revenue, or which process needs to be disintegrated, how the process of revenue needs to be disintegrated. So there are more likely questions in the interviews, or they will judge you in the interviews by this thing. So it is very important to get a thorough knowledge on IFRS 15, revenue from contract with customer, as it is a very robust standard. It integrates all the things. So it's very great to learn it in a very practical manner, how the questions are asked, and to get it thorough by these slides. I will share you after the presentation also, so that the case based scenarios might be given to you in the interview also, for revenue recognition, that how might you audit it. So the basics of the revenue recognition needs to be understood by us, because in 11th, like +1 +2, you might have studied revenue, but all those things keep on changing day by day, and internationally they have found out IFRS 15 revenue from contract with customers to provide a complete framework for all kinds of revenue. So, starting with this standard provides a five-step approach to revenue recognition. In earlier days in +1, +2, or in the Indian gap, Indian generally account accepted accounting principles, you all might have studied few of the things, that if there is a reasonable certainty, all the risk and rewards are passed to the another person, then you recognize the revenue. But all those things are changed in IFRS 15. Those all things were relevant and are relevant in few of the things in Indian gap, but globally, when you are auditing in a certain listed companies or so, then all the revenue processes are determined by these five-step model, and it is a very important process to be followed for revenue. Okay, so this will be our today's session till 1 hour first. This will be our today's session. Okay, so a bit of my introduction. I am CA Riddhi Thacker. I have started my own practice since 1.5 years, and I'm working into offshoring, auditing profile and all since past 1.5 or 2 years, we can say, approximately. And I have been helping hand with the talented team in as much as time I can devote, because Yeah, I am very less active for talented team, but yeah, I try to give give few of my things to, or my time to this, because it is a very noble cause, and I like to help others. I am also into teaching for CA students as well, or masters for a few of the hours in a week. So yeah, so that is my profile. Today I'll be the speaker for the first session till 12:30. Then we'll have a robust Q&A for this IFRS 15. So any one of you might have some questions in the middle. We can also discuss at that point of time if you raise your hand in this meeting, or we can take it on a later on basis, whatever is comfortable with you people. I'm comfortable with both ways. Or 12:30, after 12:30 we are having a Q&A session, so we can continue with that also. So let's start with this. Okay, what was revenue in old perspective? Which I briefed a little bit, that substantial risk and rewards are passing, and all those stuff are deep dig into ourselves. So how the gross inflow of the economic benefits are arising, then we used to do that. Is it in an ordinary course of business or a non-ordinary course of business? If it is ordinary course of business, then we should recognize the sales and whatever, and it is resulting into the increase in profits other than contribution by the equity participants. So these are all the old revenue recognition concepts. Now, I'm just whole of the session will be based on the cases or the examples related to this one. So this makes the thing more understandable in a form that you could digest in a long run basis, for a long purpose, for a long time period, that whenever you encounters in even into day to day life, if you are encountering any transaction, you just break it down to revenue. Like in plus one and plus two, we used to, when we first used to go into journal entries, we are like debit and credit in all the surroundings. So I want revenue to be in all the surroundings, that each is every transaction you see, you should feel that how should we break down into how the revenue might be recognized in this industry, or maybe any particular industry. So in even in day to day transactions, whatever transaction you encounter, you should be able to uh, clearly identify that as per the standards how this particular industry might be recognizing the revenue. So just like debit and credit flows into our bloods and bones, likewise the revenue is very very basic for us to understand. So the first case study, it is a very for an old perspective case study, right? So when an undertaking sells canned foods, it has 100 customers approximately. Now the delivery of the goods is made on the last day of each month. Okay, now standard payment terms requires to settle in 45 days of delivery. The undertaking's policy is to grant the settlement discount of 2% to customers that pay within 15 days of delivery, and past experiences of them says that 45% of the customers normally pay within 15 days, while remaining 55 percentage will settle but in the next days till 45 days, right? So this is the credit policy of a particular company. Now I would like it to be very interactive. So I would wish that you people also try to answer that how should we recognize the revenue for this particular industry? How should we recognize the discount which is to be provided? Should we recognize the discount for 45 percentage, 55 percentage, whole of the undertaking? So the basic principle is how much is the certainty, how much certainty is for the discount which needs to be allowed to the particular enterprise. So generally if 45%, yeah, 45 members at the discount and 55 members, yeah, correct, I just missed out the name in the pop-up, but very cool answer. it is near about correct, not a perfect one, that 45 percentage for 2% discount only. So provision needs to be maintained for 2% discount. Yeah. So this is the solution. Trade receivables like collectability for 1,000. Then revenue should be recognized for only 991, and the provision for discounts exactly the 45 percentage. For the 45 percentage needs to be done at 2 percentage. Exactly correct. Okay. So let's take another one. Now this
Riddhi,
is
Riddhi, Riddhi,
also,
Riddhi.
yeah.
Before we go to the next one, I really wanted to appreciate the example which you brought in, which showed the complexity we are dealing with, rather than you taking a simple example of goods coming in, goods coming out. I hope my
Ye-
voice is audible and okay.
Yeah,
Yeah.
perfect, perfect.
So
Yeah,
can
yeah,
you go
yeah.
back to the earlier example, please?
Yeah, sure, sure, sure.
Yeah.
Yeah.
So what I would like to know as a layman is, what if we were following the earlier accounting standard? Okay, AS9, my favorite, which I used to remember. So would it be having some difference to what perspective we have as per AS 115 or IFRS 15? And
Yeah.
why do we have that standard appreciated so much, or it had so much of difficulty in understanding, and so much of layers? So in
Yeah.
case we did not have 115, how we would have dealt with it, considering we had that simple terminology of transfer of control and ownership and stuff like that? How we would have analyzed, would it also have brought in us to the same conclusion, but with a different mindset or approach, or it would have a different result?
Yeah, yeah, exactly. So the delivery, so the goods are passing on to each month. So the revenue recognition, as per AS9, what it would be that substantial risk and rewards are passing. Just the payment terms are delayed by 45 days, or it is just the credit policy for the company. So we used to recognize full revenue for 1,000, and afterwards when we used to give it to the, if it is a trade discount and cash discount, both these terminologies were very useful in plus one plus two, that we used to recognize the trade discount as if there was no discount, and we directly recognize by 991. And if it is a cash discount, like you are coming for me to payment, then we used to recognize the discount afterwards. So this is a sort of cash discount only when the person is coming to pay. If he or she is paying in the before 15 days, then we will make the cash discount account debit afterwards, and we would recognize the whole revenue 1,000, and afterwards we would recognize the discount of 9 rupees when the payment terms are settled. So this case study is basically still not deep digging into the 5-step model, because 5-step model is yet to come. So we can come across again on this case study, and we will try to disintegrate this case into 5-step model as well. So definitely we'll come on to this one again. So till now it was AS9 we used to do like this, and the provision for discount is a similar kind of methodology which we are following here. And this case is not integrated into 5-step model. I totally agree, because this is for the basic regime we used to know. So these kind of cases might pop up into your interview rounds in technical also, or it might be into the last practical interview session also. This kind of case studies could pop up. So yeah, move a bit forward, and Hardik, your doubt still remains, so we'll surely disintegrate this into 5-step model
Sure.
again. Yeah. So yeah, this one is also a kind of old regime purpose only. So how this 10 lakh loan from from a bank, which is repayable into 10 equal annual installments, and an interest rate of 7%, where the processing fee paid is 12,500. We just know that how the repayment schedule works. So these kind of cases will definitely are not expected, according to me, to pop up into a interview round, but this is for our understanding that how we recognize the interest expense. As per the repayment schedule, it is very similar that a 10 lakh outstanding balance, annual cash flows will be there, which is the annual installment one. Yeah, then interest portion is on the outstanding balance, and in the amortization schedule, the carrying amount will be 12,000, will be less by this processing fees. Okay, so these are the both old kind of regime that how we used to do, and this is the amortization schedule. Now, based on the 5 step models which we are going to learn, there are different cases for each model to accept for us. Okay, so uh, introduction to IFRS 15 would be that it supersedes IS 11, 18, which was earlier revenue. Now, IFRIC 13, customer loyalty programs, there were separate standard for real estate as well. Now, the transfer of assets from customers, barter transactions involving any sort of advertising services. So all these transactions are now into only one framework. This is the IFRS 15 robust framework. Okay, framework in Hindi we could term it as a dhacha. So in this particular dhacha, you have to fit every transaction into it, the 5 step model, and which would relate to a better presentation of the financial reporting framework. And this is very essential because a particular industry or person with the same type of complex transaction, another industry with a similar kind of, but not exactly the same, both are following their different standards, both following their different frameworks, then that would not lead to a comparability. So this kind of robust framework fits for should fit, and we have to fit it for every kind of transaction, so that it relates to better presentation. And now it's a compulsion, so we will have to study that only. So yes, now, definitions under the IFRS 15 are for revenue, income, and customer are provided here. They are similar kind of. I would suggest that moreover, yeah, we should definitely know the definitions, but we should try to analyze the transaction and cases as much as possible, so that we can crack the interviews. I think there are many books also available that what kind of cases are asked in the interview sessions. So we should try and also solve those kind of cases, so that we are able to not just crack the interview, but we should be knowing that how a particular industry is working or functioning, and how should the revenue be recognized. So now, revenue. First is that income arising in the course of entities, ordinary course of business, right? Ordinary activities. Now, income. Increase in the economic benefits during the accounting period in the form of inflows or enhancement of assets, or maybe decrease in the liabilities also, or increase in equity other than those relating to the contributions from equity participants. Like if we are raising equity and it is leading to increase in the equity, then that is not an income, it is just raising of the equity. Then see, our +1 +2 concepts are there. So understanding these definitions are not at all difficult, because we know that raising an equity is not an income, but they are putting it into a form of definition. So forever it is like debit and credit never changes, but the framework is changed. Now, not a little bit, a very robustly changed. Now, customer, a party that has contracted with an entity to obtain goods and goods or services that are an output of the entity's ordinary business. Like, let's say, if I am selling my fixed asset to a particular person, So should that be termed as customer? Is
Anyone,
that an
guys?
odd is that an ordinary activity or non-ordinary activity? We need to classify. No. Perfect, Nikhil. So yeah, definitely it is a complete no. So basics never changes. So when we are sending sending the goods or services to a particular person in the ordinary activities only, then they are termed as customer. So if I'm selling a particular asset to a particular vendor, then it is not at all, he is not at all our customer. Now, in exchange for consideration, see, consideration is also an essential part for the same. If I'm giving gift to any other person, it is my ordinary business that I'm selling chocolates. But yeah, chocolates are very sweet. I'm just gifting it to my niece. So, is my niece my customer? Then it should be definitely no, because I'm not taking any consideration for the same. So that could be termed as goods gone by any other way. We used to term it into the trading account. On the trading account credit side, goods given as free samples or goods given as. So basics are not changing. Just we have a particular definition for a customer who can be termed as a customer. Okay. Now, this is the five-step model. It is very likely that what we have seen is Hardik has taken many interviews, so he might agree that in your resume, if there is written something and if you utter that revenue is a high risk area, then the interviewer will definitely question, what do you know about revenue? What do you know about revenues gap? Like if you are appearing for an US company, they will ask you about US gap about the revenue. If you are appearing for any European or a European company or IFRS based company, because IFRS are now into like 180, more than 181 countries have definitely as it is adopted. India has converged bit of IFRS. So Indian standards are basically moreover of IFRS only, but there are few changes to it. The carve-in carve-outs which we learn at CA final level. So there are few carve-in carve-outs, but moreover the framework is same. So whenever you just utter a word that is revenue a high risk area, so there are more likely questions to pop up for the revenues. So they will definitely ask that what is the five-step model. So five-step model, it should be just like debit and credit into your brains. It should be that how we segregate a particular revenue transaction into five models as per the standard. Now, first would be identify the contract with customer. Is it oral, written, any contract modifications are there? It could be anything. So first step would be identify the contract with customer. Second one would be identify the separate performance obligations in a particular contract. Let's say I am having a contract whereby particular bunch of services are being provided. Then I have to identify a particular performance obligation. Identify the parts of the performance obligation. That would be the step number 2. Step number 3 is determine the transaction price for the particular contract, how much transaction price I am getting. Fourth one is to allocate. Allocate the transaction price to separate performance obligation. Like we have identified, let's say in a particular contract, there are five performance obligations. Okay. Now I have got five performance obligation to be done in a particular contract. I'm taking a very simple example. These kind of examples will not be asked. Okay. So now transaction price is that for 3 months, every month I'm getting a particular fixed, let's say $100. So total transaction price would be $300 definitely. Okay. Now there are five performance obligations. So $300, I need to allocate the total transaction price to the separate performance obligations. Like, let's say in the first particular performance obligation, it takes me 30 hours, 40 hours. The second obligation, it takes 20 hours. So based on the hours, I will allocate that how much transaction price needs to be allocated to a particular performance obligation. Step number 5, very interesting. Recognize the revenue as and when an entity satisfies the performance obligation. Let's say I am getting any particular disaster here. Why? And I am not able to satisfy the particular performance obligation, then definitely I will not get any revenue. So we'll recognize the revenue only when the entity satisfies the performance obligation. Is it over time or at a particular point of time? Like if it is a continuous provision for services, then over the time we are providing services, or is it at a particular point? Let's say I have to submit a particular report to someone. So is it at a particular point of time, or is it over time? So I will have to recognize only when the entity has satisfied the performance obligation. Okay, this is the 5-step model. Okay, now I have a wonderful case study. So on 1st of December, W receives an order from customer for a computer as well as 12 months constant technical support they are providing. Very nice company. Now Wade delivers the computer. Now computer is a sale of goods, right? He just delivers and transfers all the legal rights to the customer. So on the same day, we'll get the machine, we'll set it up and all done. But what about the technical support? They are providing technical support for next 12 months. Okay, now customer paid upfront $420 for the same. Now, if the machine or the computer is individually sold, then the computer is costing only $300. And the selling price of definitely now the technical support selling price would be $120. We have just segregated the total transaction price into sale goods portion. Computer portion is $300, and the technical portion, the service component is $120. Okay. Now we have to do this particular case into 5 stages of revenue recognition. How will we do it? Okay. So definitely I'm very poor at that. You people please help me for the same.
Or maybe we can check with people. Like Rishabh, if you could just explain to people what is this case and if you understand it.
Hello.
Yeah, Rishabh,
Yes,
you're audible.
Rishabh.
Yes, ma'am. Actually, when we bifurcate the context in the five-step model, firstly, this example of computer. So, firstly, the first step, which is basic, that is the identifying the contract, which we say. So, in
Mhm.
that, we will first identify that we you tell that is the agreement should be oral or written, which it may be, and we will
Mhm.
be also getting consideration, which is visible in the case study. And
Yeah.
fifth basic step, that is a probability is also there, which we with the main step, that is probability of receiving the payments. Now the second
Mhm.
step that will be is the performance obligation. The performance obligations might be a single, that is a bunch of service, maybe like for example computer, with along with the that is the software which the technical team provides. Is it a single or distinct services which might be said? So here, if the it is dependent, for example, in computers, basic software installation is required, so it will be considered single performance obligation. But if it distincts, like that is the some other service hardwares or any other after sales service which we called, so it will be considered two performance obligation. Actually example is not clearly visible, so I am.
Oh, sorry, but you are exactly on the point that there are particularly two performance obligations. Exactly true about segregating it into the five-step model. So you are exactly going on the right path.
Ma'am, third
So
step is the transaction price, which we say. So it includes the fixed portion also. Sometime it may be in substance fixed payments, which looks might be a not a fixed, but in substance it's a fixed. And
mhm,
variable payments which we can consideration, or some discounts that is they are provided that are also deducted from the transaction price. The fourth is the allocation step which is told. So it is on the basis of the standalone prices, or the that is on the basis of the contract. Actually this is I think single contract, but if it is two performance obligation, so we
yeah.
bifurcate on the basis of the that their prices. Similarly, a discount is also provided, so we will bifurcate in the ratios of the standalone prices. That is, for example, ki if computer is costing 400 and the some other services relating to the computer, it is distinct from the computer services, like for 100 rupees. Because so we will if discount is provided, for example 100 rupees, so we will be bifurcating in the ratio 4 is to 1. And if
Mhm.
not obtained, so we will be on the basis of the cost approach or market price approach, will be allocating that. And the fifth is the base final step, that is the recognition of revenue. So
Yeah.
recognition of revenue will be is it a satisfied over time, or satisfied over time, or point in time. So if
Mhm.
the asset is created and the cash flows which are, for example, the consideration provided, is it provided on the same? There are three conditions: satisfied over time, the asset is created, and the customer has um, made the cash flows or payments which is required for the sale of goods. Or asset is not created, but the customer has a right to receive, contractual rights to receive. And one more condition which is not recalling. So if any of these three conditions are satisfied, then it is recorded on the over the time period. Else, when it is the receive consideration is received, then it is recorded at that moment.
Okay. Okay. You are going moreover into the same lines, and Nikhil's comment just popped up, and it is exactly going correct. So he is not segregated, but he was on point that 300 needs to be recognized on the point and 120 over the time. I saw that comment, and someone had raised their hand. So please, I would like to know your comments as well. Then we'll discuss in deep.
Shiraj. Am I audible?
Yeah,
Good
yeah, yeah,
afternoon,
Yeah,
Hardik
Nikhil.
sir.
Yeah, go ahead, Nikhil.
Hello.
We can
yeah.
hear you.
Yeah, thank you, Hardik sir and Riddhi madam for the session. Madam, I want to ask a question. What is the meaning of term distinct, madam? It is separate or distinct means it is defined?
Yeah, distinct to segregate. So separate could be your word. So not a defined, a particular a defined one. Separate would be a distinct one. That how would you promises? How could you distinct? How could you separate the particular contract in a particular performance obligations? Yes.
Hello,
Yeah.
Madam, moreover, the
ma'am. Performance
second
obligation.
step is a little bit difficult in moreover, the second step in five-step model is difficult to identify. Can you suggest something to ease up with second step?
Okay, yeah. Particularly exactly true that for second step we always face a difficulty that how to segregate it into a particular performance obligation. Yeah, Rishabh tried very well by segregating it to computer and technical support. So these are the two separate in this particular contract. How are we able to identify in this contract? So basically, whatever case it may be given, you will have to identify that how many goods portion, because in plus one plus two we are very familiar with goods and services portion, or in India we have all in all GST, so goods and services are definitely identifiable for us. So goods portion is computer, it seems, And here the technical support, the services are provided for 12 months, not for a particular point of time, but it is continuing till 12 months. So we will have to break it down to 12 months. Okay, whenever what I also suggest all of my friends and maybe my students for CA as well, to crack any sort of question, you will have to visualize a particular timeline. Yeah, Rishabh, definitely. Just a moment. I'll just give you the time. Definitely, you should assume a timeline that on this particular, let's say here it is 12 months, so I will get into 1 year timeline and I'll segregate into 12 months. Okay, so now 12 months on the very first day, I have definitely transferred whole of the computer, and after completing the first month, first period, technical support is deemed to be provided. After completing the second month, the second period, so 2 months technical support is deemed to be provided. After the third month, the 3 months services are to be provided, right? So this way, you can segregate into performance obligations by how many goods or services are there. So, yes, Rishabh, giving you the chance. Yes, what did you want to say about distinct thing?
Ma'am, while segregating or identifying the separate performance obligation, the performance obligation may be single, like for example, in computers along with the technical. If they're interdependent, basic, if their services which are provided relating are dependent and the resources are available, then we can classify the performance obligation as a single one. Resource are available or resource are required for that asset, that is for example computer, that and they're interdependent. The main thing is interdependency is the must for classifying it as in a single, or if it is they are not dependent, like for example that is a construction project which might be said ki some other services are provided in relation to construction contracts which we call
Yeah,
another lifts, building of lift, maybe the other performance obligation while constructing of flats in the multi-stored buildings.
yeah, perfect. Yeah, you're going on the same lines. Okay, so yeah, let's say if it is a computer, and you are telling that computer consists of all the parts like CPU, then mouse, keyboard. So they all are a bundle in computer. So
Yes.
they cannot be segregated. Definitely not.
Interconnected, yes.
Perfect. And they are itself saying in this case study that the selling price of the technical support, if it is sold separately, then it is $120. So that is the point where you can segregate it, because technical support is not definitely attached to the property. So technical support we are taking in addition to it. Okay, right? Let's say we are purchasing a motor vehicle. Okay, when you are purchasing a motor vehicle, insurance, road tax, and all the things, the seller will itself bill it to you. Correct? So you can also insist and try to compare all other insurance for the same. You can ask also the seller that no, I don't want insurance from you. Okay, road tax will pay, but I don't want insurance from you. I'll ask another 10 persons, insurance companies, that whatsoever insurance is getting benefited to me, I will take that one. So that is the point you can segregate the performance obligation, right? But you cannot segregate the motor vehicle to tires and engine and steering and all those stuff. So yeah, you cannot segregate a particular motor vehicle into different parts. Just like the computer, we cannot segregate it into the wire, the spy card, the CPU, monitor, mouse, keyboard. We cannot segregate like that. But computer is a whole separate thing. But the technical support which is incidental to it, you can also purchase it somewhere else, you can also take it from the same vendor, then you can separate the performance obligation. So Rishabh, exactly, you are on the correct line.
Means they
Okay.
are essential
Yeah.
if they are, there may be a single performance obligation.
Yeah.
Essential, no, if they are essential, then we can say like in
Yeah.
any contract, it might be in any goods or services.
Yeah, perfect. Like a mobile without a charger is not definitely not going to sell. So if it is like a mobile and a charger thing, then both will go definitely hand in hand, because there is, you cannot use the mobile without a charger. So that is a single performance obligation. You cannot segregate that to a different distinct performance obligation. You can buy separately charger from anywhere, but no, you will need the particular charger for the particular mobile itself. So that is same. Yeah. Yeah, insurance company, that is very, very, yeah, it is a very lengthy and how to recognize the revenue. We can definitely have another session for that. Uh, but let's first solve this case study. Yes, someone raised their hand, so I like to give them a chance.
Yeah. As you have given an example of mobile and a charger,
Yeah,
so how would we define whether it is a single performance obligation or a two performance obligation? For example, in iPhone, they had just provide a phone and they will uh, not provide the charger. We need to buy it separately. But if we talk about other organizations, be it Vivo, Oppo, and other organizations, they sell the phone along with the charger. So how would we ensure that it is a single performance obligation or a two performance obligation?
yeah. For iPhone, they are charging themselves, they are charging separately. So the consideration is different, and they have themselves identified to be a both separate products. So for iPhone, yeah, based on the company view, yes, based on the transaction, based on the details to be provided by you, it would be separate for the companies, yes. But a generalized idea could be a it comes with charger itself. Like before 5 7 years, if I'm giving the same example, then they were providing earphones also, but now they are not providing earphones to us. So earlier, when we used to, before 5 7 years, someone used to give the example, they will give the example mobile, charger, and earphone set is also provided. So it is a bundle, it is naturally bundled, and it is always sold to a particular person in aggregation only. But now it is like mobile and charger are being sold together only. iPhone is themselves separately selling the same. So they are only charging consideration for the phone. And the other contract is, second contract is, they are charging for the charger itself. So there the contract itself is different, and performance obligation itself is different. Okay.
Okay.
Yeah. Okay. So should I go on to the suggested portion of this case study? Yeah, moreover, all are in the same line. So just all the rivers should now dig into the ocean, and we are moving forward. First one is identifying the contract. The agreement was between Wade and its yeah, Rishabh, yes.
Hello,
Yeah,
ma'am. If there is a finance component also in the transaction price,
yeah.
so interest portion and the principal amount which we called. So how will be income will be recognized in that scenario?
Yeah, so there are different cases for it, because this one was the first part of the IFRS 15. So we have taken the
Mhm.
basics portion in
Okay,
this
okay, sir.
current session. Yes, so definitely if we want, we can have a one-on-one session for that also, and or we can take it into the later parts of the session. But this, first of all, for this one, it is a basic session for the revenue recognition understanding, right?
Okay. Thank you.
Okay.
Okay.
Yeah. First one is identifying the contract. There is an agreement between the Wade and its customer for provision of goods and services, both of the things. Now, identifying into separate obligations. Now, there are two: supply of computer and the supply of technical support. Third one is how much is the transaction price? Transaction price is $420, which was given. Now, let's allocate transaction price based on the performance obligation. Now, Based on the performance obligation, 300 should be definitely allocated to computer because computer will be no less than $300. Okay. And $120 should be allocated to the technical support. Perfect. Now, this last step, that how much revenue is to be recognized in a particular period as on 31st of December, that is very, very critical. Okay, as on the particular on 1st of September, 1st of December, it is contract is done. Okay, on 31st of December, how will we recognize the revenue for this particular contract? So it is not that you will recognize 300 and $120 both at once on 31st of December because the technical support was for 12 months, 12 long months. So on 31st of December, only 1 month has lapsed, correct? So $300 should definitely be recognized perfectly on 1st of December itself because the goods are supplied and whole of the performance obligation is met now. Okay. Now for the technical support, it should be over the period of time. Correct. So over the period of time, you need to recognize the technical support services revenue. Correct. Now, on 31st of December, how much should you recognize for technical support? Because it was for 12 months and total was $120. So 1/12 of $120 definitely we should recognize at the end of first month. Correct. So $300 that and $10 for the technical services we should definitely recognize. Correct? Okay, any doubts in this particular case study?
No.
Okay, great, great. Yes. Now, now I have what I have done is I have separated the presentation into studying the particular part. Like first we should definitely study identifying a contract thoroughly. Now, after that, there will be a case for the identification of contract. So let's start with this. So, identifying a contract. So, the parties to the contract have approved the contract. So, they should expressly say yes, like this, or they should sign the contract. So, it should be oral, it should be written, it should be anything, right? So, the parties should have approved the contract and committed to perform their respective obligations. If we both are into this particular contract, that I am the speaker, you are the listener, then we both should meet our obligations, right? So we should definitely perform the respective obligations for identification of the contract. They have agreed, they have committed, they have approved. Any of the word could be elaborated, correct? So now the entity can identify each party rights regarding the goods or services to be transferred. So each of the party can, in the contract, particular contract, each of the party should be able to identify their party's rights and obligations. Obligations like definitely if someone is doing some obligation, then only they will get the reward. No one is going to give the reward only by anything, right? So you need to provide something like goods or services which needs to be transferred from one person to another. Now, the entity can identify the payment terms expressly. Like in regional अब दोस्तों का चलता रहता है देख लेंगे ऐसा कुछ नहीं चलता identification of contract में contract should be clear in terms of payment as well, correct? Because that would not go in a particular industry, right? कि देख लेंगे अपन तो अच्छे दोस्त हैं ना देख लेंगे. Because for a contract need to be identifiable, it should be very clear into the payment terms, correct? Now it should be commercial in substance, like taking an inorganic form. Example that let's say a mother loves his child, a child loves his mother. There is no commercial substance. They both are doing their particular obligations. Mother will be cooking food in the morning. The son would go on and give money to mother to run the house. So there is, but they are both are doing their particular obligations, correct? But there is no commercial substance of this transactions, correct? So commercial substance also needs to be there, okay? And it is probable that the considerations will be collectible, right? Right, if a particular company is already into insolvency, bankruptcy, or is already into the process of going into something of insolvency, bankruptcy, then your consideration recoverability is questionable. So that sort of contracts revenue will definitely not be recognized, even if you are supplying goods, even if you are supplying services to those particular industries, not at all. Your contract, for it to be an identifiable, the collectability should be certain. If there is any uncertainty for the same, then your contract's revenue should never be recognized in the books of accounts, right? An entity shall consider only customer's ability and intention to pay. Okay, yeah. If the consideration is received and obligation is not performed, then how to recognize, right? Let's say that I am giving advance to the particular shopkeeper that I'll keep on buying goods from you only, huh? Because I like the quality of the product of your goods, so I'll keep on buying goods from you only. So first I'm giving advance. So consideration has flowed. But obligations like after that, the shopkeeper goods were not required for me. Then how to recognize the advance is given to the customer, but there is no services and goods component. So it is not at all a contract yet. Correct? It is not a contract yet because the goods and terms are not identifiable. Just like we get the vouchers somewhere, okay, that some kind of free coupons, if they are that particularly identifiable goods, then okay. But if it is not identifiable, what to do? Then nothing to do, because it is not at all a contract, because afterwards the goods and services are not at all transferred. So the entity can identify the payment terms for the goods and services to be transferred. Here you can read the second one. The entity should identify each party's rights regarding goods and services to be transferred. So that is very essential for a contract to be. Right? The second point itself says goods and services to be transferred should be identifiable. Here, even though if it is identifiable on a later date, the obligations are not performed. So definitely, if I'm giving you consideration, you are not at all, the shopkeeper is not at all my any relative. So by any means, I'll take my money back. So it will just be an advance received from customer, an advance returned to customer. Correct? So it will be just be in a money terms transaction because no obligations are met and no revenues to be recognized, because nothing, no goods, no services, nothing is transferred, correct? Okay. So back to the thing. Now, I have a wonderful case for identification of a contract. Luna has a year end on 31st December 2001, let's say. On 30th September, see, after how many months? After 9 months, let's say, yeah, Aluna signed the contract with a customer to provide them asset on 31st December. On last date, I will not close my books of accounts, but I will sign the contract. Okay, I'll sign the contract and go to my home. Control over the asset is to be passed to the customer on 31st December. Even if you come to 1st Jan, I will give you the particular asset on 31st December itself. The customer will pay 1 million on 30th June. After After 6 months they will pay me. But when will I sign the contract? 31st December. When will I pass the substantial risk and rewards in our language, old as 9 people? Yes, that is 31st December. By 31st December, as a result of change in the economic climate, may it be any party, Elena did not believe. I don't believe that the probable that I would be able to collect 1 million from the particular customer. Therefore, the contract cannot be accounted for. Okay. So there came a reasonable uncertainty. मेरे मन में शक की संभावना जाग उठी कि अगर वो मुझे पैसे नहीं देंगे तो so don't recognize the revenue. If there is a certainty, then you should definitely go on recognizing the revenue, right? But if there is uncertainty, then you should not recognize the revenue. Okay. Now, jumping on to the second stage, identifying the performance obligation. At the contract inception itself, the goods and services that are distinct. So, yeah, in the prior sessions only, we had a good call on distinct things and all. So, we have elaborated that in the later slides also. So, I will go a bit faster in this because we had a bit of discussion and briefings on the same. How what is distinct, how the series of distinct goods and services were working based on that case study we discussed. Okay. So at the inception, that means at the beginning itself of the contract, we should identify the separate performance obligations. Distinct. Okay. It is very simple that the customer can benefit from the goods or services either on its own or together with other resources. These are all the standards, the IFRS 15 words. So either on its own or together with other resources that are readily available to the customer, and the goods or services should be used, consumed, and sold for an amount which is greater than the scrap value. Okay, so the scrap, for the particular scrap transactions, there is no need for this all things. Okay, or otherwise held in a way that creates an economic benefits. It is not that you are just wasting off and selling off the waste. It is that you are generating the economic benefits, right? Okay. Now, the entities promise to transfer the goods or services to the customer is separately identifiable from other promises in the contract. Okay, so the promise performance obligation is equal to transfer of goods. Yeah, it could be termed as what and all transfer of goods and services or combined if something, then how to segregate this. So performance obligation is whatever you have to do, maybe goods or services, anything, or it could be a bundle of things, right? So whatever it may be, it could be goods, services, both hand in hand, something like that. Okay, that could be performance obligation. The entity's promise to transfer the goods or services to the customer is separately identifiable from other promises in the contract. Okay. Expressly, you have to transfer the goods or services. The entity does not provide significant service of integrating the goods and services. Okay. Integrating or significantly modifying or customizing another goods or services. The good or service is not highly dependent on or highly interrelated with other goods. So for it to be separately identifiable, it should not highly dependent. Rishabh, your words are coming now. So it is not highly dependent for it to segregate, correct? So it should be independent. Then only you can term it to be distinct. If they are expressly dependent, then you cannot disintegrate them. Yeah. Okay. Or let's say for it to bit elaborate this discussion that does not provide of integrating some goods and services. Like when Diwali comes, we all like sweets and dry fruits also, right? So many sweet shopkeepers will keep a must a packing of boxes, and they will also provide kaju, almonds, and pista, and all those dry fruits. 4 to 5 types of dry fruits in raisins, the kishmish one, and all. So they will in a box. They will have a nice, very nice hamper kind of a box, and they will integrate the goods and services. Do not provide any significant service. I'm not providing. Shopkeeper, is there any providing significant services? No, not at all. They are just integrating the goods and services, right? So just integration of goods and services cannot be termed as just an integration cannot be termed as distinct, right? Okay. Now let's move forward. What could be a bundle or series the customer simultaneously receives and consumes the benefit? Okay. So if I'm getting a health insurance done by today, every day I'm getting the benefit that even if you met a road accident, no worries. Health insurance is there. Correct? Okay, yeah, because we have to identify the performance obligation. So we need to distinct them, Nikhil. Are you getting it? Hope you are getting it, Nikhil. Okay, great. So, so I was on the example of series or bundle of thing, right? Let's say I'm getting my health insurance done. Okay, yeah. Every day I'm walking on the road, I have not to worry. Even if you met the accident, health insurance is there. So I'm enjoying the benefit. Okay, I'm enjoying the benefit of no risk in case you met any accident. The medical bills will be paid by the insurance company, so no worries. Correct? So customer receives and enjoys these benefits on a series basis. So all the insurance are generally for 1 year, 2 years, maybe anything, right? So if it is a 1 year thing, then for 1 year I have to allocate the performance obligation, correct? The particular amount which premium I am paying, that is for whole of 1 year, right? Okay, apply. Now, how to measure this progress? This is very critical. Maybe sometimes it gets critical when analyzing the case study. Apply a single method for each performance obligation satisfied over time. Over the time, only single method, and apply the method consistently to similar performance obligations and in similar circumstances. Input methods are cost incurred or the hours spent on it, or output methods could be surveys or milestones, how much milestone you have received, that like road construction example someone gave, right? So how they get their revenue, they get their tenders passed from the government, and then based on their completions they will get the, yeah, perfectly. This is mainly into construction business only. So they get the tenders passed. What does that mean? The whole of the contract price gets fixed in that whenever the tender is passed, then it is signed by the government it also, and the construction company also. Correct? Then based on how much milestone you achieve. Let's say they have to, a construction company has to create a 5-story building for a government office. Then after one floor they'll get a particular amount, after second floor they'll get a particular amount, after third flooring they'll get a particular amount, after whole they'll get a particular amount, but still some amount is pending. That paint work is done, the perfect finishing is there or not, all the things are perfect or not. So based on the milestones reached, they will get the contract price. So the performance obligation needs to be segregated based on that only. Units produced, then outcome not reasonably measured. Okay, like outcome, there is some of the variable portion. Then cost will be recovered. The entity shall recognize the revenue only to the extent the costs are incurred, right? Okay, yeah. We'll take this example. It is very wonderful example, like for a construction of a school only. S entered into a contract to build a school for one of its customers. So I'm a construction company S. To fulfill the contract, S must provide various services. Okay, clearing the site. The site has many whole of the cactus and all the rubbish plants there. So we need to first clear the site, laying the foundations, strong foundations. There is a school, man, so we need a very strong foundations. Laying the foundations, there are different services, right? So clearing the site, laying the foundation, procuring the materials, correct? Construction, wiring of the building, very important, installation of the equipments, and then the decoration. There should be the uh, tiny little cartoons because it is a school. If it is a play school, then you have to have tiny cartoons on it and all. Correct. So that sort of decoration needs to be there. Okay. The customer can benefit from each of the services individually. If I'm a customer, right, that if I want to build a school, I can get all these from a separate person. But what I did was I entered into a contract with S, right, for this whole thing. Okay. Now, identification of performance obligation. So we'll have to segregate this one, right? Now, the customer can get the benefit of services individually, evidenced by the fact that all these services are provided separately also and could be purchased separately also from a range of entities, right? However, the services are not separately identifiable because S is being contracted has significantly integrated them. That I'll just give you the school. Okay, so they have significantly integrated into an identifiable output, that is school. Now, as such, S accounts for all the promise of services as a single performance obligation. Why? Highly integrated. Exactly, perfect, Nikhil, because it is highly integrated and integrating all the services into myself itself. What does these event managers do nowadays? Okay, like if there is a marriage function, and then I can get the catering services, I can get that all mehndi services and beauty bridal services, then I can get the decoration services, which is very important in marriages, right? So I can get, let's say, all these three services from different person zones. What I do is I give a event manager, and what they will do is they will tell that we will, you just tell your requirements and I'll just give you the same. Correct. So I can get all those services from different persons. But what we do is we keep the event manager and they highly integrate all the services into themselves, right? So it becomes a single services. That is very dependent on the case study, Nikhil, that integration or highly integration into a identifiable output or not. That would be dependent upon the facts. What are the facts of the particular thing, right? So depending upon the facts, you will have to see that it is integrating themselves into identifiable output or not. So that could be questionable. This event management services, we can see that they will just that also could be dependent upon the contract, right? So they can, yeah, essentially it is the base for single or distinct. Perfect, yeah. But we'll have to see it on the case to case basis that it is highly integrating or not, right? Okay, now determining the transaction price, it could be fixed and variable. I'm going a bit of cool. And because we had a discussion about the transaction price, that it, as per the contract, the transaction price will be there, right? Transaction price is the amount of the consideration, definitely, to which an entity expects to be entitled in exchange for transferring, right? Now, it could consider a variable component also. So, variable could be discount, like based on the number of purchases we make, sometimes we may get a higher discounts, right? So, discounts, rebates, refunds, credits are all issued if you take a certain, they are variable based on how much you consume the thing, right? So for that you need to definitely estimate that how much, estimation you will have to make that how much will be consumed. Transaction pricing is similar to transfer pricing. Transfer pricing, if you are talking about that direct taxation transfer pricing, I don't think that, oh no, no, if in costing transfer pricing, not exactly like that one, but similar to that one. Yeah, we can say transaction price is the amount of consideration only in the accounting, right? In the financial reporting framework, it is just consideration, nothing much more than that. But the cash back provided, then it needs to be deducted. Yeah, cashback is just like a voucher, but it is very separately identifiable because you are getting the money into your accounts, right? If you scratch the reward of GPay and you are getting a 5 rupee, 7 rupee cashback, it is definitely coming into account because you have purchased something. So it is deducted from the same. Okay, there are variable considerations, but the estimates need to be made for the variable considerations, right? Now, also, variable considerations need to be on a certain, yeah, moreover, it is like a discount. Cashback is moreover like a discount itself. So, now, even variable consideration needs to be done with some estimate, but there are constraining estimates. So like we can say that if it is highly probable that you will get a certain variable consideration, then you should recognize. But if it is uncertain, then definitely you should not recognize, because based on the estimates you have to work upon variable considerations. Yeah, it is a very technical portion, so we can keep a separate more for the case studies. Now, finance components, as this one was a very basic case study portion. So finance component, which someone Rishabh might have had the doubt. So finance component needs to be recognized as the we need to determine the cash selling price. So it is very, that is very similar to if you have done leases before, then this sort of things, if the financial component is there, then if you have done leases and financial instruments before, it is very similar to that kind. But we will definitely have a session on this financial component. Now, sometimes there is non-cash consideration. This needs to be looked upon in this one only. Now, pay value of the consideration needs to be determined in if in case it is a non-cash consideration. If the fair value cannot be determined, like I'm not able to estimate the fair value, then standalone selling price of the goods and services should be recognized as the revenue. Like like few of the times the company will say, no, I'm not getting any cash consideration or any consideration in bank, so I should not recognize the revenue, right? Because I'm not getting any consideration in cash. But if you are enjoying some non-cash consideration against the supply of particular goods and services, so definitely you will have to recognize the same, right? So they are not the stupid ones, so they will understand that if there is something flowing non-cash consideration, you should you should estimate the fair value of the consideration. I am very bhola people, like I'm very innocent that I don't understand how to estimate those fair value. Then standalone selling price of the goods and services needs to be done. Correct? The credit vouchers we discussed in your Q&A portion only, that it is reducing the transaction price, so it needs to be deducted, right? Then allocation of transaction price to the particular performance obligations, right? The objective of the allocation is that the particular performance obligation, if it is met, that the particular revenue should be recognized, right? Allocating the discount, if I'm getting the, let's say I swipe GPay for 5 times, and after that the fifth or the sixth reward, particularly sixth reward, I'm getting the cashback, 5 rupees cashback. So I'm getting the particular discount, right? Few of the discounts are based on the number of purchases made by us. So if there is bundle of goods and services sold allocated to unless relates to a single item. If it relates to a single item, then we should definitely correlate to that only, right? But if it is not particularly getting rational, that which one to allocate, which one to allocate, then you should go for proportionate allocation based on the relative standalone selling price. The selling price of the particular things are those, then you should allocate the discount accordingly, right? Now, step number 5. We are on our last step, correct? So, recognize the revenue as you satisfy the performance obligation. How much, whatsoever the performance obligation is met by us, that particular revenue should be recognized. Recognize the revenue when the entity satisfy a performance obligation by transferring what are particular promised goods or services, right? Goods and services are assets, even only momentarily when they are received and used. Okay, so goods and services are the asset. Now the asset needs to be transferred when the customer obtains the control of the asset, right? Okay, so I'll keep today's session till 5 step model itself, the contract cost and few, all those things are associated to IFRS 15 itself, but I think we should have a series on the same and not to rush into things and to complete the same. So we should keep it today's 5 step model only because it was a very basic one. But we had a very thorough and few of the critical case studies as well. So it was very nice. Hope you people liked it, right? Please, people, tell me in the comment section. Yeah, thank you so much. Thank you, Rishabh. Okay,
हेलो
yeah, yeah.
मैम जैसा हुआ कि एक कॉन्टैक्ट है फॉर एग्जांपल कि एक टीवी वाले से अपन ने कॉन्टैक्ट किया कि 55 टीवीज विल बी गिविंग ठीक है
Hmm,
और उस समय उसने कंडीशन रखी थी कॉन्ट्रैक्ट टर्म्स की इफ यू बाय मोर देन 80 टीवीज
hmm,
in the earlier stage we buy only 55 then in the next month we buy
hmm.
50 TVs more so
Okay,
then the discount which we are talking about earlier so it will be
yeah.
provided on the or treated as a new contract it will be.
Yeah, no, it will be for the whole of after 80 TVs, you will get a particular discount, right? Yeah, not a sort of contract modification because it was in the contract itself that after buying 80 TVs, you will get, let's say, 80,000, 80,000 voucher or something, right? Anything if you are getting a monetary 80,000 incentive,
Yes.
because if you are purchasing the particular things, they will not give the discount to those things because you that billing might have been done and you might also have paid the same. So it could be that after 80 TVs they will give you a 80,000 deduction in next bill, or they might give you a 80,000 flat credit like cashback or something, right? So that there could be
Discount
two
will be
options.
taken.
Yeah,
After
yeah.
the TVs, they will be providing us the discount in the bill itself.
In the bill itself, right? So that should be over 80, whole 80 TVs. The previous 55 TVs of last month also, and the
Of the
next
student
TVs, yeah, also, because that should be allocated to whole of the uh, proportion,
contract,
right?
yes.
Because you are getting it after 80 TVs, right? Okay. Yeah,
Okay.
thanks, Nikhil, for the compliment. Thank you. Hope you enjoyed that one. Because you have continuing session, so I might not take much time. Yeah, sorry, Nikhil, it would not be a contract modification or change in accounting estimate, but it is just a simple sort of discount which you are getting after 80 TVs, right?
Charity, wonderful. But still, if you guys have
Yeah,
any doubt, then we are just DM away. And again, next, the coming Saturday, we will have Riddhi's session on leftover or any doubts or, IFRS
yeah,
16, Riddhi, which is even more difficult.
yeah, perfect. Yes, yeah, perfect, perfect. We can have that session. Yes.
So
Thank you.
we can have the next session in next 2 minutes, as we already have Tushar Saigal, who has joined us. But in case anyone wants to just freshen up or stuff, they can come back. Meanwhile, Tushar will set up the stuff. Thank you, Riddhi. If you
Yeah,
wish, you
thank
can log out or
you.
have your own Independence Day celebrated.
Oh, yeah. Okay.
Thank you.
Thank you so much. Yeah. Thank you. Bye bye.
Thank you.